Welcome folks to top-down analysis by T2SMC Trader. So this is the weekly analysis which you have to be done around the weekend. That means either Saturday or Sunday. If you didn't do it before watching this video, then you can compare yourself with mine. Okay. Make sure that you are not going to skip this part. This is the most important part for the day traders. If you don't do it, trust me, you are not doing it right. You are a perfect gambler. Before going to this video, I really would love to request you guys to give me the thumbs up. It is the most important part for our channel, not my channel, for our channel. And don't forget to subscribe if you are new. Let's go to the video. At the beginning, what you have to do, you have to open your calendar. That can be any kind of calendar. Over here, I'm just using Forex Factory, but you can use any other calendar as well if you want. So over here, I only focus the red impact news and the medium impact news. Now in Tuesday, Wednesday, Thursday, we have some red impact news, and Friday we have some medium impact news. In my opinion, as we have CPI in Wednesday, Tuesday and Monday is not going to be high probable for trading. Okay, so after Wednesday 8:30 a.m. there will be a better price action. That is my belief, but still we will see how this thing is going to work. Though I have the red folder news in Tuesday and Monday, we don't have any other news. Because of CPI, market can spend Tuesday for making liquidity. So be very careful. I'll be there. I hope that I'll be there in live streaming as I come around every day, almost every day around 9 a.m. New York local time. We will see the price action over there. So far we have an idea when we should trade in this week. The best opportunity or high probability trade will create in the chart after 8:30 a.m. Wednesday. Okay, then Thursday will be better opportunity. This should be the best day for trading, the Thursday. If Wednesday CPI run is not too far, okay, if it is not too far, then Thursday is the best. Otherwise, Wednesday and Thursday is the best 2 days for trading this week. Friday, we have some medium impact news. Either way, Friday is the hardest day to trade. We'll see that as well. Okay. So after that, I would love to go to dollar index. This is my dollar index. I would love to start from the weekly chart as it is the weekly analysis. Now you can see that in my chart there is already some level is marking, but I would love to tell you that it is just nothing. Okay, just think this is the clear chart, because when I will explain, you will see that it is really too easy to mark. Okay, over here, this is my relatively equal highs there. Okay, relatively equal highs, which is my extreme buy side liquidity so far. That is my extreme buy side liquidity. Above this high, I have another high over here. This high and that high, they are relatively equal highs as well. Below this, I have another relatively equal highs. You can say, brother, this is sideways candle. Why you mark that one? This high and that high, all of them are relatively equal highs. This high and that high, they are relatively equal highs. I just marked every single high as my buy side liquidity, because this is the weekly chart. When you will mark some highs from weekly chart and you will go to your 15-minute chart, I believe that you will get some kind of relatively equal highs from 15-minute chart. Okay, that is why I'm just marking almost every relatively equal highs from weekly chart. Market came here. Where did it came exactly? To this specific order block, the highest up close body close candle. This is the order block. Okay, if you just mark the order block, extend it to your right, you will see that market has traded that order block, went lower, little lower, come back again, retest the order block, reclaimed the order block, then it fall dramatically. When it has fallen, there was a bearish fair value gap. If you remember, I talked about this bearish fair value gap, that if it hold, then market will reach until this weekly mean threshold. If it fail, then market is going to take this buy sell liquidity. As you can see, this bearish fair value gap, entry fair value gap, bearish breakaway fair value gap. Entry fair value gap hold the price perfectly, send it back until the weekly mean threshold. At the same time, wick went much more lower, took that low. That means it has taken the liquidity as well. Order block is holding the price. The bodies didn't close below this mean threshold. And if you just make it little bigger, you can argue that no, brother, it closed little below of that mean threshold. I'm not here to expect tick by tick things. Okay, that is ICT's job. ICT love to explain tick by tick. I'm here to give you the overall idea why and how I'm going to mark some specific level, and I'm expecting that it is going to work. Okay, so until this mean threshold is not broken, something like this, look at this candle. If that candle was like that, I would say that this order block is broken. Market is going for maybe this low, maybe that low. At the same time, you can see market went lower but failed to trade that last fair value gap. Am I going to worry, or am I going to think that market is going to trade that last fair value gap? No, I'm not going to think that way, because this order block is my most priority. I'm focusing on this order block here, that I would love to see mean threshold is not going to be broken. If there was no order block, I would simply think that market is reaching for this last fair value gap. Then I would expect some kind of reaction from there. And if just for example, there is no mean threshold, no order block, I would say that this week market is going lower again to trade that last fair value, because it is going to be the random reversal. But as I have this weekly mean threshold, which I had from a long time ago, okay, I didn't mark it just now, right now. I have marked this order block and weekly mean threshold near about here, so near about 5 to 6 weeks ago. Okay, so this is the weekly mean threshold that is holding the price. When market is holding the price, I'm going to remove the order block level and I'm just going to keep the mean threshold only. Look at here, there is a bearish fair value gap. I would love to mark that bearish fair value gap. Okay, and let me change the color. It can be a little longer video, I'm sorry for that, but I would love to go step by step so that you can understand why, when and how you should expect the price action. Okay, so when this mean threshold is holding the price, it has already made a bearish fair value gap. If this bearish fair value gap, market trade that bearish fair value gap, something like that, then you can't think that market is going higher. This fair value gap is going to decide market is going to fall again, or it is going to use as an inversion fair value gap. That means market will go through this one, tap to this fair value gap, boom, something like that. You can get some kind of reaction from there. See this one, you can get some kind of reaction from there. If you don't get it, which is my expectation, market is not going to respect that last fair value gap. That is my expectation. At the same time, I would love to see a bullish fair value gap over here. So market will go through this bearish fair value gap. It will go through this bearish fair value gap and it will make a bullish fair value gap that will be unfilled. So here from weekly chart, I will expect a fair value gap that will be unfilled. Then market will go and take some kind of buy side liquidity, or if it is overzealous, and maybe it will take the extreme buy side liquidity as well. We don't know that, and it's a long-term process. We are not thinking about that right now. So my intention is now market will expand higher dramatically. There is no Mickey Mouse move or something like that. Something the way it fall, it will reverse again the same way. If and only if this fair value gap hold the price, then I will expect that market is reaching for this last fair value gap, or maybe the 50% of that week. See this week, so it's not that much important, and I really don't want to see if it really holds the price. It will keep falling, that is my expectation, and I will see if it can break this last fair value gap. Then finally this week low, or 50% of that week, we will see that later. Right now I'm thinking market will go higher for the buy side liquidity. That is my expectation. Let's go to daily chart. Now here I'm in daily chart, and from daily chart, all you can see that market went lower, take this liquidity. So this low has been taken over here. It can come little lower, then it will give me a market structure shift. So see this swing high here, this one, it is valid for shifting market structure. The very next day, that means Monday, it will trade little lower. Then Tuesday, it can spend little bit here somewhere, or it can fall little lower. Then Wednesday, by CPI, it will boom, it will go through this high. That will be my market structure shift. Then Thursday, there will be a down close candle or consolidated day, or maybe little lower run, because if the CPI run is too big, if the CPI, sorry, for example, Tuesday, then sorry, Monday, Tuesday, Wednesday, I will get the market structure shift. It will go through this bearish fair value gap. Thursday, it will trade or make a fair value gap over here around that area, and then Friday, market will go higher again. This is how I'm expecting that price will work this week. If and only if this fair value gap from weekly chart or this fair value gap from daily chart, if it hold the price, send it back below this low, I will start to think that market is reaching for this low or maybe this last parabola from daily chart. So it's a different issue. We will see that when the time will come. I would love to go to hourly chart. So from hourly chart, all you can see market fall until that area, then it was consolidating. It has taken the high or make this weekly bearish parabolic gap validate over there. Right now market is consolidated, so I really don't have anything to say about the hourly chart. For me, dollar index is the barometer to trade indices of future market. Okay, so over there over here I just need the higher time frame bias where market is reaching for. In lower time frame like 1 minute, 2 minute, for me 15 minute chart is the lowest time frame for dollar index. So from here overall I have an idea that market can expand higher. That is my expectation, as I have the buy side liquidity only. I have the bullishness for dollar index. Now let's go to Nasdaq. So there is your Nasdaq chart. I would love to start from monthly chart, then we will go step by step. Okay, so from monthly chart, all you can see market reach until a certain level minus 2.5 standard deviation. Above this minus 2.5 standard deviation, I have made a video, standard deviation video, to track the exact high tick by tick. Please watch that video for understanding more about how to use the standard deviation and predict the exact high or exact low. So market has traded that a monthly minus 2.5 standard deviation, then it has been reversed. When it was falling, it came until that low. Okay, this low and that low. How does it look like? Absolutely relatively equal lows. Are they so clean from monthly chart? So the big foundation or the big bank, they are seeing this is a very strong support. This is their support zone, and I'm seeing this one is my target zone. That means market should take this relatively equal lows from monthly chart. So from monthly chart, I'm really expecting that. Let me actually remove this one. I'm really expecting that market is going toward that sell side liquidity. Market should go toward that sell side liquidity. Okay. Now, still, I'm not saying that market is going for that sell side liquidity, because you have seen that there is a small fair value gap over here around that area. You have a fair value gap around that area. You have a fair value gap over there. My first expectation is market will go and to reach until this last fair value gap at least. But as it is reversing from there, some specific level, obviously it can reverse and go for the all-time high one more time. If it has done, we will see that right now from monthly chart, all I'm seeing that relatively equal lows, market has been rejected from minus 2.5 standard deviation. I have just got an idea over there, just an idea. So over here, this is my weekly chart. So from weekly chart, the same sell side liquidity around that area. At the same time, this is the last fair value gap to that specific leg. This is the last fair value gap. Okay, so market has been traded this last fair value gap one more time, went higher. When market has been rejected from minus 2.5 standard deviation, it left a bearish fair value gap around that area. See, there is a very nice, small, cute bearish fair value gap around that area. So when it made a bearish fair value gap, what did I tell you? After big move, always wait for a bearish fair value gap. Always, you will always look for a bearish fair value gap. So finally, market has left that bearish fair value gap. I'm very happy to see that bearish fair value gap is open there. I don't need to trade that on. If you trade that on, perfect. But for thinking that market is reversing, I need the bearish fair value gap. From weekly chart, I have got that bearish fair value gap. It came here, made the support zone, which is going to be triggered in my opinion, because my overall expectation is market will reach either this last fair value gap or that entry fair value gap to that specific leg. So this is the lowest low, market will reach for that one. But if it is overzealous and if it can make a bullish fair value gap now, again a bullish fair value gap, then I'll think that no, market is going for that high. So I need, like, I don't know how many weeks it will take to make a bullish fair value gap for reversing again. But in my opinion, this is the perfect place to look for sell only. Now, where exactly you should look for that sell? Look over here, market has made a bearish fair value gap around that area. So this is the bearish fair value gap from weekly chart. It can simply trade that bearish fair value gap, then it can fall for this relatively equal lows at least. I'm not talking about this last fair value gap or everything. I'm just thinking about here. If market would love to go higher, what it has to do? It has to go through this fair value gap. Now it has made this fair value gap. It has to go through this fair value gap. Then maybe it will make some kind of bullish fair value gap around that area. Trade that bullish fair value gap. React. You will get some react from here. Then market will go for that all-time high. It's a long-term thinking. Right now, what is my expectation for the next candle, next weekly candle? I would love to see the next weekly candle will go toward this sell side liquidity. How I'm going to do? I'm going to make sure that that is the direction for this week. To make my direction for this week, I have to wait until Wednesday, because Wednesday we have the CPI. Around CPI, we will get our direction. The CPI run, whatever run will be, if it is a bullish run, then in my opinion, market will go toward that all-time high. If that is a bearish run, then market will take this sell side liquidity and then maybe this liquidity, this low, or maybe until this last fair value. So CPI run will confirm the weekly direction for this week. That is my own opinion. At the same time, I would love to say that Sunday open can change everything. So far, you have known that weekly gap, okay, new week opening gap, how strong that is. You should not trade inside that new week opening gap, and the new week opening gap helps us to decide the direction. So as I am thinking that market is going to fall, maybe there is a new week opening gap just below that market. Okay, then market went through this new week opening gap, use that new week opening gap as a support, then it can keep going higher. Or maybe there will be a new week opening gap above the market, and market will trade that new week opening gap, use that new week opening gap as a resistance, then it will fall for this sell side liquidity. It can happen as well, vice versa. I mean, whatever it is, the new week opening gap is extremely important. Don't forget about that one. Okay. So from weekly chart, so far I'm thinking that market can trade this fair value gap. It can trade that fair value gap. After trading that fair value gap, then market will fall for this sell side liquidity, because this is very clean lows. Market doesn't keep this type of smooth lows or smooth highs. If you look over here, you don't have any kind of buy side liquidity. Look at these highs, how smooth they were. Okay, market went higher, take that smooth highs, reached until minus 2.5 standard deviation, went lower, made relatively equal highs to believe the retail trader that this is the very strong zone. It started to go higher. It can go little higher again. Every single bull candle, trader will start to take buy, and after little higher move, market will fall again for this relatively equal highs, lows. That is my expectation right now. Let's go to daily chart. So over here, this is the daily chart, and from the daily chart, same liquidity level over here. This is the relatively equal lows around that area. At the same time, over here, you have this up close body close candle, which is your bullish order block. Now I'm going to remove this weekly bearish fair value gap from my chart. Please make sure that you have this weekly bearish fair value gap in your chart. Okay, it is extremely important for this week, at least for this week. If you look over here in daily chart, this is the highest up close body close candle, which has traded that fair value gap. I have already explained why this is important. Okay, I would love to mark this low around that area. This is the order block. So this is the bearish order block from daily chart, and there will be a min threshold. If you see that market went through this daily order block level, then you have to mark the min threshold of that daily bearish order block, and you should think that market is not going to close above that min threshold. At least if it failed to trade that min threshold, we are going to be very happy to see that, then it should fall. Over here you have this bearish fair value gap. So around that area from daily chart, you have this very nice bearish fair value gap. You can think that, okay, we have a bearish fair value gap, market failed to close above that constant crossment of that bearish fair value gap. Now we should look for sell. Now it's the wrong idea. I don't agree with you. I would love to see that, to be honest, I would love to see that before Wednesday, market will stay here somewhere in Monday. Then Tuesday, market will go higher, and it will do the manipulation. Then it will go for the Monday low, but it is not going to take the Monday low. Then in Wednesday, market will go a little higher again until that constant reinforcement. Then boom, by CPI. Okay, doesn't need to take this sell side liquidity, but I believe that market will take this sell side liquidity by Wednesday. That is my belief. If and only if market can make a bullish fair value gap. Why bullish fair value gap? After a big fall, you should always look for a bullish fair value gap. After a big move, to the upper portion, you always look for a bearish fair value gap. It doesn't need to trade that bearish fair value gap, but same thing, okay, it doesn't need to trade that bullish fair value gap when market is reversing. But when it has made the bullish fair value gap, it is a confidence that market can reach, I mean market can change the direction. That means it is falling, now it can go up again. For that confidence, you should wait for a bullish fair value gap. This is the daily chart, so I'm talking from the daily chart. You should wait for a bullish fair value gap from daily chart at least to get the confirmation or for building more confidence about the buy. Until then, you should not think that in a longer term market is going for that moon, okay, all-time high again. Instead, you should keep thinking that market is going to fall until a certain level of the time, I mean certain level, as I showed you from monthly chart and weekly chart, that they are the certain level from the very high time frame. How far it can reach? Until this order block. If it failed to trade until that order block, it can happen as well, but I am not going to be very happy to see that market has failed to trade that order block list at least, okay, because then it will leave some unfinished business. I don't want to say over here that market has left some unfinished business around that area. It should complete every kind of business over there. Then before Wednesday, it should done its job over there. Then by using CPI, it will fall for the sell side liquidity. Okay, and how to trade the CPI, we already know that, and we will try to talk about that as well when Wednesday will come. Okay, I will try to come little before around CPI. So from daily chart, I hope that you got your point. What should you look for over here and how it is going to trade? Let's go to hourly chart. If you think that it's a little complicated, don't worry. Please rewatch this video. It will be easier for you to understand. Okay. So here, this is that sell side liquidity from your very higher time frame, monthly, weekly, daily, and from hourly chart as well. You can see this is the relatively equal lows from hourly chart. Instead, this one, you have these relatively equal lows as well. Okay, so market came here. Where did it came? To this last fair value gap from hourly chart. Just let me mark that last fair value gap from hourly chart. I will remove that later because from hourly chart I really don't need that type of information. Whatever, market has traded that hourly last fair value gap. After trading this last fair value gap, where is your last down close body close candle? This is your last down close body close candle. Mark that as a order block. Okay, so this is the hourly order block. After trading that hourly order block, market went through every single gap over there, every single gap. So where is your first or last fair value gap? This was your last fair value gap. Okay, I would love to mark that last fair value gap from hourly chart. To be honest, I don't like hourly chart that much, but for me, the 50-minute chart is the most valuable chart. So that was the last fair value gap from hourly chart, and market went through this last fair value gap, tapped to this last fair value gap, used as an inversion fair value gap, went higher, take this this high and that high. Okay, look, this high and that high, they're relatively equal highs. Market has taken that relatively equal highs, and if you look over here, this small price action, except this fair value gap, except this fair value gap and this volume balance over there, except this fair value gap and that volume balance, from here to here, it's balanced. So let me show you one more time, from there to there. Okay, and let me remove this daily fair value gap, bearish fair value gap. This whole area is balanced, absolutely perfectly balanced, except this fair value gap, and there is a very small volume balance. I'm not going to mark that volume balance, but you make sure that you have seen that volume balance. Okay, what is that line? Excuse me, what is that line? That is that bearish order block from daily chart. Okay, so if you remember, this is the bearish order block. Where is this imbalance situated? Just at the level of that bearish order block. Here to here, everything is balanced perfectly. This back and forth run, it has balanced this whole area except that imbalance. So if market would love to go a little higher, there is nothing wrong to reach until this fair value gap over there. Don't worry, when I'll be in 15-minute chart, this is going to be more clear why market will go over there, because I always keep telling that market always go for liquidity. So why market is going for that imbalance? No, market always go for the liquidity. Just give me a little more time. Okay, so this imbalance and that order block level, this is the only level where market should reach for to trade. If it is overzealous, then it can reach until that volume balance. I really don't want to see that. Why? Because I want to see this volume balance is going to work as a breakaway gap. that market didn't reach until that area. So I'm thinking that market is reaching for this one by Monday and Tuesday after trading that area. Then Wednesday, boom, market will fall. Where? For this sell side liquidity. This is my so far this is my expectation, and I would love to see market will work like this way. If something happen, I mean something else happened, we will take our decision or we will change our decision in time. Okay, now how market is going over there, look, when it fall little bit, it has taken this relatively equal lows. So this low and that low, they are relatively equal lows. Market has taken that relatively equal lows, or the sell side liquidity has taken over there. After that, you have the market structure shift over here. So this is your market structure shift. Then you have a very small imbalance over there. Around that area, you have a very small imbalance. So it what it can do in Wednesday, sorry, in Tuesday, not Tuesday, in Monday, market can trade that value, I mean that fair value gap. Then it can make relatively equal highs, because as I am expecting, market will stay inside the Friday range in Monday. So market will make some kind of, it will just trade that on, and it will be very consolidated because we don't have any news in Monday. So it will be the accumulation phase. Even if it go a little higher, it will come back again into the range, Friday range. Then Tuesday, market will go higher and take that relatively equal highs or whatever Monday high, trade that uh, fair value gap, that order block level. Then it will come back again for the Monday low, but it is not going to take the Monday low. That is my belief. Then by using that CPI, it will go and fall for this sell side liquidity. This is my whole plan for this week. So I'm making my plan even before starting or seeing the chart. If my plan works perfectly, then I will be interested to trade. If it doesn't work, then either I will change my plan or I won't do anything. Okay, so you have to understand this part as well. Let's go to 15-minute chart. From 15-minute chart, as you can see, before this area, I mean wherever market right now, it is above the new week opening gap. So market actually used that new week opening gap as a support. After supporting the new week opening gap, it is reaching for these relatively equal highs over there. Okay, let me show it. This is the relatively equal highs from 15-minute chart. Why 15-minute chart, brother? Why 15-minute chart? Let me remove this hourly gap actually. Why 15-minute chart? Because 15-minute chart is my bellwether for Nasdaq. I am interested to spend most of my time in 15-minute chart. I don't need any other time frame, not daily, not weekly, not monthly. What should you think? You need those time frame? Absolutely you need, because you are learning. When you will be able to learn everything and you will be able to see the 15-minute chart comparing with your daily or weekly or monthly chart, you won't need any other time frame as well. But at your beginning, you are going to focus on every other time frame, from monthly, weekly, hourly, 15 minute, then 1 minute. Okay, so you will go to your higher time frame, that means weekly or monthly chart, around the weekend, and every single day you will start from daily chart. Just 3 time frame: daily, 15 minute, 1 minute. And in daily chart, you will just get an idea if there is something obvious from there. If you see there is nothing obvious from daily chart, no need to mark them at all. Okay, just for your 15-minute bias, you need daily chart just for your 15-minute bias. Whatever you are thinking that 15-minute is going higher, 15-minute chart is going higher, then why it is going higher, that will be confirmed from daily chart. That's why daily chart is important for you. Otherwise, daily chart has no use. So when the 15-minute chart is confirmed and you are getting some point where market is reaching for this relatively equal highs, that relatively equal highs, this imbalance, look, from 15-minute chart, this is the imbalance above, this is the anti-fair value gap. Just above this anti-fair value gap, you have the last fair value gap over there around that area. This is that daily order block. Let me remove this one. This is that daily bearish order block. So I'm thinking that this week first market will take this relatively equal highs, it will trade that bearish order block, then it will fall for this sell side liquidity. That is my so far an idea for this week. If market is overzealous and it really would love to go higher, we will see, because above the market we have some other buy side liquidity as well, though they're not so obvious, but still we have some buy side liquidity, lot of buy side liquidity, not some actually. We have a lot of buy side liquidity, but for that we need the confirmation from daily or weekly chart that there is a bullish fair value gap, because we are talking about a long run, right? That's why we need higher time frame bullish fair value gap, either from daily chart or from weekly chart, whatever you see. We need a bullish fair value gap to think that market is going for that all-time high again. There is that king, okay, situated over there. Mount Everest is over there, so it will go for that. If we get a bullish fair value gap, until then I'm not bullish, I'm bearish, and I'm thinking that this is the crisis moment for the Nasdaq, where market will decide, is it really going to fall for forever, I mean not for forever, for long term, or is it actually going to reverse again. So this is the crisis moment for Nasdaq, or not only Nasdaq but also all other assets. uh, they are going to struggle to change the bias, that means bearish, because after a big bull run, now, after a big bull run, they are falling for some weeks. Okay, so they are going to struggle for that. At the same time, dollar index will decide where this guy will go, what is its direction, as dollar index has the only buy side liquidity and it has a very clean sell side liquidity around that area. I really would love to see that market will fall, and it will keep falling until the daily last fair value gap or the weekly last fair value gap, if you remember, until that area. So this is all for today's top-down analysis, guys. I hope that it will be little informative for you guys, as I talked a lot over here, where I didn't have any other opportunity to make it more shorter without talking all of these things or facts, because these facts are going to build your confidence to trade the market with confidence, and that's why you need to be done this weekly analysis even before starting your market. You have to make your plan, you have to know everything what is going to happen in this chart beforehand. Even the price printed on the chart, you have to know what is going to happen and how it is going to print on the chart. This is the most important part. If you think that you will act after the effect, then you are a retail trader. We are the ICT trader, and we don't react after the effect, we predict the effect. Okay, what is going to happen, we are predicting that, then we push our button depending on that prediction. I'm not telling that you are going to predict the setup, I'm just telling you we are going to predict the direction. We have to know the direction. If we know the direction where market is, or the bias, that means we are the king of this jungle. Okay, we are the lion of this jungle, we are the wizard. So you have to be wizard if you want to be successful or consistent profitable trader by ICT concept. You have to be know you have to know how we are going to I mean how you should mark the bias. So until the next video, cheers guys.